We're going to talk all things DSCR today. As we discussed earlier, on the application, you do not put income, you do not put employment, you do not put salary. With regards to the documents, so the question to you, do we ask for tax returns for this program? No. No tax return. Do we ask for pay stubs? No. Okay, no job, no pay stubs, no W-2, no tax return. Okay? Now, why? Here's the idea. The DSCR is a cash flow program. It's only for investment properties. And you can ask me questions as we go. Basically, the idea is this. If the person is managing the payments right now, let's say they're not late on their credit is very important. If they're managing their payments on time and they're managing it well, and now they're buying an investment property, okay? And the property can handle itself with the rental payment, that's all we need. I give you an example. Let's say somebody is buying, let's say I'm your client, and I'm buying a one-family home, and it's going to give me income of $4,500.
How do you know it's 4.5?
Okay, good question. How do we know it's $4,500? How will we know it's $4,500? First, we're going to do our own assessment, what the neighborhood or this house can bring. But that's not enough. For the bank, it's going to be, you want to take a guess? Where we're going to get that number of proposed rental income? The appraiser will indicate, let's say, I think it's 4,500, but in fact, it's going to come back at 4,400. Then the bank will use 4,400. So appraisal report will show two things. Appraisal report will show the value of the home and the rental value. So that's the rental value that's important. You can also provide leases if it's a little bit more. Sometimes banks the lenders could be a little bit lenient and say, okay, we'll take it. But usually it's the lower of the two. Good example is this. Let's say the appraiser comes back with 4,400 rental, but your lease is for 4,000. Okay, which number will the bank take? Sorry, the lower one. Okay, yeah, okay. So so let's say it's 4,400. Now you work backwards, guys. Let's say the taxes on this property are $900 a month. And let's say insurance is another $200 a month. So in total, that's $1,100. Taxes $900 a month, insurance $200, and in total is $1,100. Remember that rental income is $4,400. So first you subtract the expense. And if so we get 4,400 minus 1,100, you get 3,300. So that 3,300 is now your target for the loan amount. So at 6%, it will be close to 550,000. If the rate is higher, it's going to be lower.
I would like to know why we are not adding the taxes and the insurance.
So rental income, think you're a landlord. Imagine you're a landlord, okay? And you collecting from your tenant 4,400. But you have to pay taxes to the government from this 4,400. You have to pay the insurance company for the insurance premium. So you only will be left with 3,300.
Right.
You understand?
I understand.
You understand now?
Yes.
Okay. Okay. Now, let's say this property also had some HOA. You know what HOA is?
Yes.
Homeowner Association. Let's say there was additional $300. Then you have to take it away as well. Okay? All the expenses as a landlord that you incur, you have to take away. Don't worry about like utilities and that stuff. That's not part of this. Okay? Now you're left with just 3,300, and that's all you need to qualify. You don't need to bring the bank statement. You don't need to prove your any other income. It's strictly property based. And you can do this for one family, 1 to 2, 4 family. You can do it for 5 family. You can do up to 8 families. You can do for condo co-ops. You can't. Condos are okay. You can do it for mixed-use properties. We can apply this. We can apply this rule. So basically, DSCR stands for debt service coverage ratio. So as long as we cover the rent, we're okay. As long as we cover expenses with the rent, we're okay. Now, some banks are even more aggressive. Guys, listen to this. They will go with the rental which is below your expenses. So in this case, let's say a person wants to get 700,000, his PT, his taxes, insurance, all together will be 5,000, but his rental is only 4,400. Some banks will still do it with higher rates. Now, we have here in the audience someone who came from a retail bank. She's very surprised, and I understand why. But yes, here in the wholesale, in the mortgage broker world, this is 101. We do this every day, all day long. Okay? Now, this is only a basic video. There are, by the way, just so you know, there will be, for many programs, there will be reserves required for this program. So assets are important. Credit is important because the bank is taking a risk. They don't know what the income is going to be for this person. They're taking a risk. There are other things that they will be looking more carefully. You know, they will scrutinize, your maybe your credit history, your bank statement, whatever they can look at. They will look at the credit report and say, hey, you know what, why so many address changes? Also, now the question is this. Let's say someone who has no experience, they're not a homeowner, they never owned a home, and they want to buy this and they use with this program. Can they do it? What do you think?
Yes.
Yes, they can do it. There are banks that will do first-time home buyers as investment for this program for the DSCR. Okay?
Is there loan to value requirement?
Okay. Question is there a loan to value requirement? Great question. Of course. Usually it's not more than 80. And on a cash out, it's probably 75%. So the second test is definitely the value, your mortgage compared to the value of the home. Where are we going to get the value? We're going to get the value from the same appraisal where we get the rental income. Okay, correct, Sophia. And by the way, one other thing which is really important and people take advantage, you can do all of this in the name of LLC. You still need a guarantor, but the house can be owned by the LLC. And people love it because they don't want others to know what they own. And this is also better obviously for liability purposes. Okay?
No guarantee for LLC.
Well, there's maybe no guarantee, but the bank will still approve it based on the individual. In other words, the note will be in the personal name, the ownership will be in the LLC. But they will personally obligate your client to pay the mortgage. It will show up on his credit report. You guys understand? Okay. Guys, this is only one of the products. We're going to uncover more of them. Let's book these appointments and I'll tell you more. We have bank statement program, we have a P&L program, we have a asset utilization. I will teach you all of this.